God damn it, an entire generation pumping gas, waiting tables, slaves with white collars. Advertising has us chasing cars and clothes, working jobs we hate so we can buy shit we don't need. We're the middle children of history, man. No purpose or place. We have no great war. Our great war is a spiritual war. Our Great Depression is our lives. We've all been raised on television to believe that one day we'd all be millionaires and movie gods and rock stars, but we won't. We're slowly learning that fact. I'm very, very pissed off.
Welcome to Market Makers, your home for tomorrow's TA today. Often imitate it, never replicate it. Guys, this is the week. Our fractal patterns have been playing out. We got to the target even sooner. The earliest projection I had on the S&P was for the 17th. Here we are on the 13th, 4 days ahead of time. But this week, tomorrow morning, we have the PPI, Producers Price Index. View this as the appetizer for the CPI. Now, depending whose numbers you want to believe, if you look at the Fed's forecast for the CPI, then everything's coming in hotter than the Fed's target of spot 2%. However, it's mixed. So this is going to be interesting. Core is still coming in hot, but it's slightly less hot than last month, whereas CPI is supposed to come in hotter than last month. Combine that with the fact that Morgan Stanley is saying this month is going to be the miss, meaning that the consumer's been beat up enough. CPI is actually going to come in lower because the economy is actually slowing, and basically the government's numbers are bullshit, which we know that they are. Now, Zero Hedge basically wrote the same article, and Morgan Stanley agrees with that from their premise as well. So it's really going to be interesting, guys. So again, this is all going to be about assigning risk, assigning probability. At a minimum, if we have a mixed CPI, my interpretation is you're going to have volatility, right? The media is going to sell it as it's hot, but it was expected to be hot. It's not hotter than hot. So that's good. Markets can rally. Obviously, if it comes in cooler, it's going to rally the markets. If it comes in hotter, the markets are going to sell off. These are binary catalyst events, which is complicated by the fact that we may have a mixed inflation reading this month. So it's going to be interesting to see how this plays out. We want to see how this presents in the charts because we've had massive trades setting up on these patterns, the three-wave double tops. We have Bitcoin hovering at key support levels. So let's go look in the charts and see how this is playing out, see how this develops. Guys, be sure to like and subscribe to the channel. I hope everyone had a fantastic weekend. Lee, let's start the show. Guys, as always, if you want to check out our Discord, if you liked our work that we do here on Market Makers, then go to the video description and you can check out our Discord. Message Lee in the Telegram. We have our old website is back up. We have our new website under construction. So we will be replacing the old website, but you can still join the Discord through the website. That link is in the video description as well, marketmakers.trade. And of course, if you want to trade these Ponzi markets, check out our two fantastic sponsors. You can check out SimpleFX to trade all the equities in Bitcoin. You can check out BingX to trade all of the cryptos. Those links in the video description as well. All right, that's the housekeeping. Let's start off with the 10-year yield, guys. What will happen if inflation comes in hot? Well, what is the yield? The yield is future growth expectations and inflation expectations. The 10-year will rise, conversely putting pressure on the markets. You're just hovering at support at 4.48 right now. So you would see this rise up if we get a hot inflation print. Now, does it have to be hotter than hot? This is so stupid to even talk like this, right? This is like the reality, the alternate reality that we live in. Hotter than hot. If it's hot but expect it to be hot, maybe it's not as bearish for the market. But if it's hotter than hot, then it's bearish for the market. So there's a lot of caveats to this, guys. This is a catalyst-driven market, but just basically understand yields will rise if inflation is coming in hot again. Markets, most likely, the highest probability will sell off. What does that mean for the dollar? Again, if inflation comes in hot or hotter than hot. The DXY should also rise. Why would it rise? Because it means the Fed will be higher for longer and won't be able to cut rates as fast, which is propping up the dollar. Inflation comes in cooler, dollar's going to fall, yield's going to fall, market's going to rise. It's that binary of an event. Let's look at this, how this is playing out on the Dow, the baby S&P. This is YM. So we had our W pattern play out, guys. We got above the 50, caught right up at the base here of the fractal, 39,630. That fractal level is 39,657. Obviously broke through our trend line. If we pull our Fibonacci down from the all-time high, we hit the 786 perfectly, 39,738. Again, current price 39,630. We may end up just hovering in these spaces, get the PPI, and the PPI is going to be interesting, right? If it comes in more hot than expected, hotter than hot, then again, you could see some volatility. The markets could sell off in preparation for what could easily be a hotter than hot CPI, right? Comes in cooler, then you're going to see the markets rally more towards their highs. So it's going to be interesting to watch this play out. Hit the key resistance level. Obviously, if this trends higher, inflation comes down or the market likes the numbers, whatever, then you want to see if your all-time high is going to hold, which is at 40,358. If this starts to break down, you have your massive double top that's forming across all the indices, right? That's something you want to pay attention to. A lot of algorithms, a lot of retail traders are going to be watching that 50 right there, right around the $39,000 level. Let's move forward, guys. On the ES, this is the S&P, the E-mini. Talked about this many times, so I'm not going to spend a lot of time on it. You can watch the last video as well. 5-wave move down here for our previous July 2023 high to our October low, right? Lunar eclipse low, lunar eclipse, solar eclipse, sell-off. Made many videos on these factors as well. Will we have the law of alternation play out, which is what Gann wrote about 100 years ago, meaning we had a 5-wave move down. Perhaps this is a swifter correction and price is just going to simply pull back and go back up. It's a possibility. Everything's going to come down to the catalyst for the market for this week, which is going to be inflation. As of right now, you can see price is struggling. If we end up selling off with inflation, we're going to watch our base, because if we start breaking down, we have our lower level targets, 48.21, 4,700, 45.85. Let's look at this on the actual retracement. So we're looking at our retracement levels here, guys, so we can see price playing out. Again, I had this time for the 20th, again, just based on market symmetry, but this could still play out to be the 20th, could be the high. The earliest I had was the 17th, which is a Friday, so we could see that this week as well. Maybe we get a little bit of a rally and then the sell-off. So we'll see how it plays out. You know, when you're dealing with a binary event, I don't know what the numbers are going to be. Obviously, supposedly, nobody knows what the numbers are going to be, but it's just going to be a catalyst-driven market. I covered these fractal retracements very heavily in the last video, so watch that video if you're curious about those patterns playing out. Now, when we look at this, the E-mini here for the S&P on the 3-day chart, guys, I like to zoom out and look at it. I mean, look at this beautiful 3-wave double top pattern. That's what you have right now. On the daily, you have your W, but this is a beautiful 3-wave double top pattern. If we pull a fib retracement from the all-time high to that corrective low, you hit the 786 perfectly and you got rejected. 52.54, you're at 52.48. What does that mean? That means if this holds, if these numbers come in hot or the market doesn't like these numbers, you're going to see price start to decline. And then the levels you're going to want to watch, just from a basic TA perspective, your neckline at 49.63. If you break that, you're coming back to test your December highs, that 48.21 target I just showed you on the other chart, okay? Conversely, if this holds, if inflation shocks the market and comes in lower, if the consumer is weaker, then you're going to see more action towards the upside, probably retesting our highs of 53.33 to see what happens. Could that induce a false break pattern where we get higher highs up here, make a new all-time high, then start chopping down to the downside? We'll have to play that by ear and see how that is going to play out. But as of right now, if I was going to trade these double tops in the marketplace, this is exactly where I would want to be, is at the 786. And I would be looking at these as a simple trade. If this breaks down further, awesome. It's a fantastic trade, much in line with the first top that we traded and talked about on the channel, shared this and traded this on the Discord. And we shared 45.92 where we traded for the last retracement for the big move down. So we're 2 for 2 on catching these big moves. This move, however, is going to be extremely binary. We have to see how the market plays out here, what those inflation numbers are, because this trade could easily get stopped out for me if we come up and take out our all-time high with a low unexpected inflation report. So it's all about probabilities, all about risk, but price is right where I would want it to be into entering a short. Again, none of this is financial advice. This is just my view of the marketplace, ladies and gentlemen. So that's what I'm looking at on the ES. Let's look at our indicators really quick. Let's bring this down to the daily. Daily bullish territory rolling over on the MFI. Volume momentum is still bearish. Again, you have your W pattern in play here. We talk about this over and over again, but there's your beautiful W pattern. We hit our target. We're floating beneath our target. It's all coming down to the numbers. If we look at the NQ, we have our higher high scenario, same exact thing that we've covered many, many times, our lower high scenario for how the market will end up playing out. It's just a forecast. Looking at the NQ retracement fractal, again, covered this extensively last video, but just looking at this fractal, again, this is tracking really nice. We had 18,364 identified for wave 2 peak. We've almost got there. We had that peak coming May 20th, May 17th, just like on the S&P. You're a few days out. You're 20, 30 points below it. Could easily hit it, guys. That's the move I'm looking for to see if we're going to top out and retrace down. And unfortunately, and I say unfortunately because this isn't technical analysis, what the inflation number is. It's literally just a number and the market's reaction. It is psychological. So we're going to see how that plays out, if it induces a pump or induces a sell-off. And that's going to be key for the next move in the marketplace. If we look at the NQ on a 3-day chart, exact same thing. I mean, look at the beautiful 3-wave double top. Where are we on the NQ here for the NASDAQ? Just shy of the 786. I mean, we got up to 18,348. 18,367 was the target. I mean, you could drift up there today, right? You're at 18,3 right now. You could drift up there towards the end of the day and pull back down in anticipation for the event tomorrow. And that's all that's going to happen, guys. That catalyst is going to drive the market, but this is the exact target area in my kill box that I want to be to trade a massive potential 3-wave double top, right? That's where I want to be in the marketplace. So we'll see how this binary event plays out. Key support structure below you here on the 3. Well, actually, let's go to the daily to look at this. Daily, there's your W pattern. There's your price movement. There's your 50. You're sitting on it with some of these candles. It's right at the 618 at 18.1. You lose the 50, right? If this rolls over tomorrow of high inflation, be great to see a back test. Depends on the fear in the marketplace, how fast the market would sell off. But if this rolls over, then you're looking at your next legs down to see if these other areas are going to hold that we've covered, okay? See if your low is going to hold in this area for your double top as well. When we look at this, we throw this over here, 17,113, which is what? Lines up beautifully with your December highs because you've already visited your December highs. So if the neckline breaks, I have to go back to my fractal pattern. If that neckline breaks and starts selling off, that area that I'm looking at down here is closer because we already got that 17,000. We're going to revisit that 17,000 and we'll see how much lower we can get beneath it before the next wave up and then the next retracement level down. Again, it's simply a fractal that's played out before. So we're seeing if it repeats again, because if the key moves in the market repeat again, it makes the pattern highly tradable, which is why I like this range that it's in now for a potential trade setup with hot CPI. This thing's going to dump. Okay. So let's go ahead and move forward. Let's look at Bitcoin. Bitcoin on a 3-day chart. This is holding some really good support, actually. So first of all, let's look at our upside targets. We've talked about the upside targets many times on Bitcoin. We get new subs to the channel, new viewers to the channel. When I'm looking at Bitcoin, how are we able to nail some of these tops? We're looking at our diamond pattern breakout. We can pull a fib from that diamond pattern high to that market low in this cycle. We get the 200% expansionary move to 48,196. Look at that beautiful hit, beautiful drop off. And now if we want to check for Fibonacci expansion confluence, we can go to that next trading range consolidation point, the Wyckoff range here, pull our fib from that range high down to the diamond pattern low, we get our next 200% hit right on the dot, right? 73,765. So if Bitcoin retraces and holds key support, which for me is this area, we've talked about it many times, low that the highest level it could hold here is 52, but this lower area needs to hold the 40s, right? 45, 46 needs to hold in that area. But if it does, and it then moves up with the market, if we have liquidity in the system, we don't have a black swan event, we don't have some type of market ending event occur, then I'm looking at the next 200% retracement ratio here for the marketplace. And I'm looking at the 200% at 109, 150, which lines up beautifully with our balance line, our harmonic symmetry of 110. Okay, that would be the next move for Bitcoin. So, in other words, Bitcoin can still retrace down to these mid 40s if this area that gives out, and it can then move up towards our 110K level in a market melt up situation. If it does not, it'll make a lower high and it will collapse. Okay. So that's the other option. So we're just tracking this. But right now, you're simply sitting on the 618 of 60,356. Key support area on a large time frame here. Key support area you want to hold, and you want to see this come up. And if this ends up coming back up, just like this, you have to watch the double top situation that could potentially play out on the equities, on Bitcoin, if we get a hotter than hot CPI, right? A hotter than hot situation. Watch the double top scenario. You get a cooler situation, you're going to see Bitcoin start legging back up and retesting the highs. Let's move over to Bitcoin on the daily. When you drill into this, there's your 50 for those of you that care about moving averages. What I care about is how we're trading in the range, any patterns that we're forming. Had the beautiful W pattern, sent price down. And right now we're just trading in the lower fractal corridor, the bearish fractal corridor. We want to get back to the neutral zone up in this area where we can make bullish patterns and start to accelerate to the upside. And obviously, the higher you go, the better you go, because it's easier to pivot out to the upside from here. So right now, we're just holding steady. There's trades in here in the smaller time frames, obviously, but we're just ranging side to side. When we look at our indicators on the daily, it's chop. Momentum is chop. MFI is chop, up and down, ranging in this tight corridor. Everything's sitting and waiting for the next catalyst, which will be the inflation numbers. Same thing if we look at Solana. If we want to go ahead and assign this out to a trading range, there's our climax candle to the downside. Here's a reaction candle. We can see we had right now we have a 3-wave pattern that could turn into a 5-wave pattern that is played out here. Let's go ahead and mark this off. So we have this pattern. You have your descent from the high down to your Wyckoff range, back up, back down, making a higher low, back up, making a lower high. You don't have a trend yet, making a higher low. So this next wave could be to the upside, or this could just make a double top right where it's at and come back down and retest this range, right? Again, catalyst driven by the numbers we're going to get over the next 48 hours in the marketplace. Hence, this is why it's a trading range. You have higher lows, but you have a high and then you have a lower high. So we want to see some type of breakout. And the numbers I really want to see on Solana, we had this fantastic trade on Solana, guys, the 45% drop from this high, this double top 3-wave structure that we shared on YouTube as well, 45% drop. But the numbers I want to see come back up here, guys, are the 189 and above, the 786, right around that range. To do that, you got to get above the 618 at 173. So if we see hotter than hot inflation numbers, look for Solana, look for crypto. If you see the markets rolling over, see if these can hold up, or if they're going to start to capitulate. Solana falls below 113. It has more downside incoming, guys. It's at 149 right now. Your low in that previous accumulation range was what? $83. So you're at 150. You want to see if you can hold this range over here, this fractal range that we've talked about many times. Hold the high support. If we get that hot inflation, then watch and see if these lows are going to hold in this range, $83, $84, because that's your next level down. Another way you could simply view this, you have your level 1, you have your level 2. If you get your third key wave down to this level with hot inflation, this is where you want to hold a bottom and start to put in a reversal back to the upside. It's the easiest way to view the markets. Same with Bitcoin, same with equities. This is why you have fractals. This is why you can trade the markets with previous patterns. The market relies on prior history. If we look at Ethereum, same thing, guys. You have the first two waves of a potential double top. We've talked about this many times. Wave up, wave down. Will we get that next wave up? Or will we just build a base here, hopefully put in some type of pattern like a W, and then try to move back to the upside? It's going to depend on the numbers. I hate to keep repeating myself. I know you guys hate to keep hearing it, but this is how binary the market is. Low inflation, we're going back up. High inflation, look for this to start falling back down with the marketplace. And then you really want to hold the prior accumulation range. You look at your high in that range, you have 2141. You look at your low in that range, that's 875, right? You have these ranges that formed here. You want to see if you can hold the next range. But this, to me, alone would be a decent drop, 2966 to 2141. With hot numbers, you could see that. If we get the mixed numbers, you're going to get volatility, and that's how you can see these different wave patterns form out, where maybe you get a push up, then people say, sell it off, and they sell it. Then you want to watch your neckline here, if that's what you end up doing, forming that three-wave pattern, because that neckline is going to be 2796. Okay. Key area of support to hold. You want to try to get more upside and break out to the upside. Everything will be dictated by the numbers. We look at the DAX. The European markets are euphoric. Why are they euphoric? Because basically the ECB has done everything but said they're definitely cutting in June, right? So the markets all rallied in Europe. The FTSE rallied, the DAX rallied. Stocks 50 rallied. They all rallied. The Paris market rallied. DAX came up to resistance here, 18,922. Again, it's just sitting here, wanting to see what the numbers are, seeing how the U.S. markets react. We had our beautiful W pattern print here as well, and now we're at resistance. So this area, guys, I just want to watch and see. No hurry. You know, in the GFC and in .com, when the Fed first cut rates, the markets still rallied for just roughly about a month before they started selling off, and you would have hit the high if you would have known to have sold. When the market's anticipating the rate cuts, that first cut could give a temporary surge to the marketplace, but the reason the Fed will cut rates is the economy is weak. And I do believe that's going to translate to Europe as well. The markets can get excited about this first rate cut, but why are they cutting rates? Because the economy has sufficiently weakened. You have to understand the economy is like the Titanic. And just because you cut rates doesn't mean you're making a quick move. It took time to suppress the economy. It takes time to recover, which is why these initial surges after rate cuts tend to be bearish in the marketplaces. If you look at market history, again, the last 2-3 sigma bubbles are the two that you should look at. So I would be patient. I would be waiting. I'm waiting for the US numbers to come in here when I look at the European market, see how that affects them. If we look at the FTSE, this thing, looking at our market makers Bollinger Bands, got to the top of the band, just over 2 standard deviations. Let's go ahead and turn that off. The FTSE just broke out of this long consolidation pattern. You can see where this thing was trying to boogie to up here. If we look at this from a harmonic expansion, we got above the 1618. We got rejected, but then we gapped up above it. Now we're above the 200%. And so again, just like you have on the DAX and the other European markets, some of them got up to the overbought territory. They're kind of pausing. They want to see what happens with the US markets. And that's the way I would play these markets, because we don't know what's going to happen. And we don't have a pattern yet here on a daily time frame. You just simply have an up candle, you hit some resistance, and you have one red candle. And if that inflation comes in lower, you're going to see all the markets just move back up again. If it comes in hotter, then you're going to start to see some type of pattern print. And as pattern traders, we can take advantage of that, jump on that, and try to profit from it. Guys, I hope you liked the video. I hope you check out the room. I'd love to talk to you guys there. Message Lee if you have any questions, and I'll respond to your YouTube comments, your X comments as always. Take care, everybody. See you on the next video.